For more on what this means, let's bring in Krishna Guha, Vice Chairman of Evercore ISI. Krishna, great to see you as always. Do you think that moment today was a major policy shift, or are we all overreacting a little bit?
No, I think it was a big deal. Now, look, going ahead of the news on the Omicron variant, it looked like a head of steam was building up at the Fed to accelerate the taper and at least open up some more optionality on early rate hikes next year. Then the new variant came along, and I think there was a general sense that maybe the Fed would kick back into its patient and risk management mode, downside risk management mode, maybe look to wait to learn a little bit more about the variant before they considered the question of accelerating taper. But what we heard from Powell today was, as things stand, full speed ahead for accelerated taper in December, regardless of the news to date around Omicron.
When do you now expect the first rate hike?
I think it's a close call between June and September of next year. I still think that the Fed is going to require some further material improvement in the labor market before it judges that its maximum employment condition has been met. So the key thing there really is what happens to labor force participation. That's to say the supply of workers. Now, one of the problems with Omicron is that it might delay the return of workers into the market. And this, I think, is key to understanding why the Fed hasn't reacted in a dovish direction to this new variant news. This shock, Omicron, if it is a big shock, might turn out to be more stagflationary than disinflationary.
That's exactly what Mohamed El-Erian said earlier. But I do wonder if the Federal Reserve has proven to be quite flexible, and we know Fed Chair Powell has been concerned about COVID and has tied the economic path of this country to the path of the disease. And if Omicron does turn out to be worse than feared, and there's still a ton we don't know about, if none of this really matters, because he's just going to be patient on tapering and rate hikes anyway.
So there's, I think, certainly something to what you say, right? Powell has absolutely emphasized how central the pandemic is to the whole economic outlook. And, you know, everything is hostage in some sense to pandemic developments. But, and it's a big but, the question is, what's the balance of the Omicron impact on supply versus demand? If the impact is more on supply than on demand, then even if this wave is serious, it doesn't necessarily call on the Fed to be more dovish. That's the key point. What I would say more broadly is that the market has gotten used to the Fed being a very sensitive downside risk manager. But the reason it could be that very sensitive downside risk manager was that it wasn't constrained by inflation. Right now, the Fed is constrained by inflation. So the Fed put isn't what it used to be.
Krishna, great to see you. Thanks for joining us.